Good afternoon, everyone, and thank you for being here with us today. We are delighted to be able to give this presentation to you today. My name is Bill Van Huisstede, and I'm the president of Fortress Equity Management. I'm sure all of you have become familiar with the massive amount of debts that have been accumulated around the world. You've heard the phrases fiscal cliff, debt ceiling, and similar expressions coming from the debt issues throughout Europe. Some of you may have already experienced some of the effects of these things in the economy and in your own investment portfolios. Maybe you've also experienced the impact on your families, and if not your own family, you have likely heard of its impact on other families. How did we get here, you may ask? And what does it mean for us today? What impact is this going to have on the futures of our children and our grandchildren? These are all very valid questions and concerns. We can't deal with the issues in this presentation, or not all the issues, certainly, but we will put a good dent in them today. To bring some clarity to these questions and concerns, we have with us today Jonathan Wellham. Jonathan is the founder and president of RockLinc's Investment Partners and has spent 20 years in the investment industry, both in portfolio management and as senior executive positions. I am thankful for his willingness to share his insights with us today in a presentation called Debt Storm. Please welcome Jonathan Wellham.
Thank you very much for coming, and thank you, Bill, for that kind introduction. I'm looking forward to really just unpacking for you what I believe is really one of the major challenges facing the financial markets. I also wanted to thank Crossroads Communications for the opportunity to utilize their production facility so that we can get this message out in a broader context over time. Now, I've called this the debt storm, and over the next hour or so, I really want to cover off the various topics that you see on the screen there. First of all, I want to give just a couple of words pertaining to RockLinc's Investment Partners so you know who we are. And then I really want to look at this issue of debt, and more debt, and just give you a sense of the sort of the gravity of the situation that we're facing throughout really the whole global economy, but in particular the developed world. Then I want to just shift our attention, well, why all this debt? What's the problem? What went wrong in terms of how we have been dealing economically around the world and within our various countries? And then I want to look at some of the key financial challenges. I've reduced those down to, I hope, a manageable number just to give you a good feel for what's going on and the main problems here in the financial markets. And then I want to talk really about going forward. What's the strategy? From investment perspective. We're in the investment business and we're looking at this as where are the opportunities? How do we protect our capital? So I want to talk about investment strategy, some of the sectors that we are looking at in terms of investing, asset allocation, how best to put portfolios together and manage portfolios so that you can weather the debt storm that we have really approaching us and really in many regards is upon us. And then just very briefly at the end, I want to mention what I believe are 6 sort of key essential solutions, if you will. Just look at, going forward, what could we do to at least start to chip away at this to make this a better situation than what we're currently facing. So that's where we're going to go. And hopefully you can follow along there with no problems. I'm going to cover a fair bit of material. All these slides will be available for you, and so you'll be able to follow up and think about these things over time. In terms of RockLinc, just a couple of slides about us, just to, again, put some context here. We're a small investment firm, really 4 employees, started back in January of 2010. I've been in the financial business for about 22 years now and started this company back a little over 3 years ago. Our focus is on creating portfolios that are individualized, customized for our clients' needs. And then when we talk about investing clients' money, I've listed a couple of things that we believe differentiate us in the marketplace. First of all, independent thinking. And one of the things that I hope comes through this particular presentation is we're not looking at the world the way that you're probably hearing on CNBC or BNN and a lot of the different broadcasts. We're trying to cut through and really do a critical analysis of what's happening and how we're going to ultimately go forward and protect people's money and capital. And so we want to reject consensus thinking, if you will. And I think most of you realize consensus thinking is not the way to differentiate and to actually get ahead in any area of life, but in particular, the investment industry. We also focus on a deep understanding of the investments. You know, we're longer-term investors, so we think it's critical to have a long-term fundamental understanding of the companies and the various investments that we're making. We look at the current realities in the marketplace, but in order to contextualize the current realities, it is very important to have a historical context. And one of the deficiencies, I believe, in much of the training within the business schools is not enough emphasis on financial history, because human beings and governments and different social entities within the economy typically repeat the same mistakes over and over again. And that's very much the case with the debt crisis or the debt problem that we see that we're going to be talking about today. And then I like to use an interdisciplinary approach. And this is also going to come through, I think, in the presentation today. I want to look at the economy from various different perspectives. And in particular, the uniqueness here, we'll be looking at it really from the ideas of the faith commitments of the society and what people actually believe, with a very firm belief from my perspective that the economy ultimately is just a leading indicator, a lagging indicator, if you will, of what has already taken place in the society and the culture. So in other words, the economy is just impacted by all of the decisions that have taken place really in the previous years and decades. And so when we look at the economy today, we really should be looking back and saying, well, what went wrong? Why have we gotten to this place? And you really have to look back, because the economy is just tracking items as they are now, but ultimately it's taken years to get to the place where we're at. And so that's critical. So looking at it from an interdisciplinary approach. There's just a few facts and figures about myself, and over the years, just in terms of just a certain degree of credibility in the marketplace, I spent a great deal of time in the university, in the business faculties, in the science faculty. My most important degree was my MA in theology and philosophy, and so hopefully that'll come through today when you actually look at the world and cultures and ideas, and really that's what drives an economy ultimately, not mathematics. And we'll talk a little bit more about that. And in terms of RockLinc, we also have a very strong advisory board, so we think it's very important as a company to surround ourselves with excellent people. And I've listed some of our advisory board members there. Dr. Lawrence Hewick, who is a former professor at Wilfrid Laurier, is very active in venture capital now in Burlington. Duncan McIntyre, who is a serial entrepreneur and a venture capitalist. Bill Van Huisstede, who you met, who introduced me, and has been a long-time player in the financial industry, along with John Van Leeuwen, who is the CEO of Ecosynthetics, which is a really interesting company that is involved in some alternative, using green products and coming up with alternative ways to deal with adhesives and different paper coatings and so on. It's a very fascinating company built really in this area and based in Burlington. And Robert Wildeboer, who is involved with a couple of public companies, including Martin Rea, one of the major auto parts companies in North America, and also with Aecon, which is Canada's largest publicly traded infrastructure company. And so these are great resources, and it allows a small, nimble company to go deep when it comes to our research. And then the last slide I have, just in regards to ourselves, is that when we're thinking of money management, we're really trying to align our interests with our clients. And so when we go back and look at what we believe are the key factors in money management, keeping fees low, independent thinking, a fiduciary responsibility to all of our clients, full transparency in terms of our portfolios and everything that takes place in them, and a high degree of experience in terms of the operators of the company. Now let's shift over to the topic that I want to focus in on. That is this debt storm, if you will. And let's just look at the debt picture. And I've given you just a few facts and figures here. Since 1970, and really since 1970, that the debt has sort of gone, if you will, parabolic. In other words, it started to really compound and escalate on any measure right across the developed world. And since that time, personal debt as a percentage of income has more than tripled. And that's really throughout all of the developed world. Same thing here in Canada, and I'll give you a slide in a second. So we've had a tripling of debt as a percentage of personal income. In terms of sovereign debt or government debt, whenever I talk about sovereign debt, I'm talking about government debt, that also has tripled. If you take the developed countries, the OECD countries, it was about 40% debt to GDP back in 1970. It's now over 110% across the developed nations, and climbing. This is not shrinking, it's not stabilizing, it's climbing. And corporate debt has also increased substantially over those 50 years or 40-odd years. In terms of this slide, the emphasis here is on Canada. Often, if you talk to Canadians, they say there's no debt problem in Canada. That's in the United States, it's in Europe, it's in Greece. You pick other more convenient countries to point at. But we do have a debt problem here in Canada, and we're just the same as all the other developed countries. On a personal level, the Canadian debt as a percentage of income has gone from 50% in 1970 up to 160%. You can see it on the graph behind me. 160% of debt to income. That's the highest of all the developed countries, actually, on a personal level. If you look at the next slide, I find this an interesting slide, and you'll just take a look here. This is the United States, and it's the accumulated debt prior to George Bush the second George Bush, and you can see that that was a little under $5 trillion, but a little under $6 trillion, I should say, about 5.7 trillion. And then with Bush, you had the red box added on, and that was another numbers of trillions of dollars. And then with Barack Obama in the first 4 years, you've had that taken up to about $16 trillion. But to put a little bit of perspective on the next slide, if you just try to retain that slide in your picture, I find this very interesting, because if you look at this slide, and it's a little busy here, so let me walk you through it. If you were turning 100 years old today, the total U.S. debt was $2.8 billion. The total outstanding debt in America 100 years ago was $2.8 billion. It now takes 19 hours to create that debt in terms of the deficit that the U.S. is running. 19 hours. If you were born 50 years ago today, which is pretty close to myself, the total U.S. debt was $300 billion. That now takes our friends in the United States less than 3 months to rack up in deficits. If you were born 12 years ago today, there was $5.7 trillion in debt. And it now shows that in the last 12 years, we've gone from 5.7 to over 16. 65% of the debt in the United States has been racked up in the last 12 years. And so as we'll see as we go through this, what you're seeing here is the growth in debt has gone parabolic. It's compounding really rapidly. And this is why there's really this debt storm. It's not sustainable.